happening, traders? Back again with another video. Now, I'm going to say this at the beginning of the video because if I say it at the end, most of you would have kind of like fucked off by then. So let me just make this extremely clear. This channel, guys, is about you, your frustrations, your pains, your struggles, and trying to create breakthroughs for you in your particular style of trading. Now, it's all well and good me, doing these market updates, showing you zones that I've taken and so forth. But what I really enjoy doing is for you to leave me something in the comments. Let me know what you're struggling with. Let me know what pain points you're going through. And then what I would ideally like to do is then create a video around that. So it's really personal to you and it actually helps you specifically get through, your current barrier. So that'd be really fucking awesome, guys. If you just take a minute, think about what you're struggling with and leave me something in the comments and I will create a video around it. With that being said, if I go to my notification tab over here, we actually have a comment from a subscriber, Gavin, we better be a fucking subscriber, about how to find zones with high probability and profit margins. So what we're going to do is we're going to dive into the pound yen and I'm going to demonstrate how that can be done really simply. And I'm going to show you a trade that I actually took, but I forgot to put it up. So what I'll do is I'll put the video of that at the end of the video just so you can see. So let's dive into the pound yen, and CMC has actually upgraded their platform. I didn't really like it in the beginning, but it's actually a hell of a lot quicker and it's precise as hell. And I'm starting to actually love it now. So as you can see, we are on the 4-hour chart now. Just in case you're watching this for the first time, I use the 4-hour chart exclusively to define trend and execute my trades, and I use the 2-hour and 1-hour to refine larger zones. Okay, so to answer the first question, how do you find a high probability setup, right? Guys, this all depends on where you are in the curve, okay? And what I mean by curve is from the highest high to the lowest low on the time frame that you execute your trades on, okay? Not the day, not the weekly, just specifically the time frame you execute your trades on. So for me, if we're looking at the highest high, that would be around here. And if we're looking at the lowest low, that would be around here. But the next question is, how do you know when you're at the lowest low or when you're at the low of the curve? Because you can't just tell, because this area here could be the low of the curve, or this area here could be the low of the curve, or this could be the low of the curve, right? So how do you know when you're actually at the low of the curve? You look to the left, all right? And this will just make complete sense once you see it play. So we look to the left and we can see that this had this massive run up here, and this was the low before that massive run, right? So let me just draw this. That right there is the low of the curve that we're going to be looking to take longs at once it hits that. So best thing to do, just put your support and resistance line in, all right? And what we want to do is start looking for our structure around this area where this line is, okay? And our structure is very simple for a zone. It's either a bullish engulfing candle on the 4-hour time frame for demand, and a bearish engulfing candle on the 4-hour time frame for supply. All right, very simple. So let's just take this away. Now we know where we're at. Now we know exactly where we're at in terms of the curve and the low of the curve, right? So that's clear. So let's just get rid of that and come over here now. So now we're going to start looking for our structure, and this is the trade that I actually took. Now we're going to start looking for our structure, and you can probably see it right now. Let's just draw it in right here. Let's just change the color. All right, so this is our structure. Now we are geared up. Well, was geared up for this particular trade when it came back and hit it. So we've had this push out all right, it's produced a bullish engulfing, and then immediately we've had a push back in, and that's where my trade got triggered, and then the market came out of it and pushed, right? So now we're into the second question now is, where do we take profit? Now, guys, I don't believe in taking 1-to-1 or 2-to-1 or 3-to-1. It just doesn't work out for me in terms of risk reward ratio. For me, I take a minimum of 5-to-1 when it comes to trades, a minimum of 5-to-1. Okay, so that's my sort of like particular risk reward ratio. So it's entirely up to you where your risk reward ratio is. Now, at the end of the day, you want to trade from zone to an opposing zone, ideally. Okay, so if you're trading from a 4-hour demand, then you want to trade up to another 4-hour supply. If you're trading from a 1-hour demand, you want to trade up to a 1-hour supply. Simple as that. Does not get any more difficult. And if that 1-hour supply is within your risk reward ratio, then take it. If it's not, then don't take it. Simple as that, right? So let me just show you the tape trade that I actually took. So let me just get this price tool out now. So what I risked was 38 pips for a profit target that was 237 pips. So that is not a bad risk reward ratio. Okay, not a bad risk reward ratio at all in anybody's books, right? So how did I know where to come out? Now, you've probably seen it, but you may not have, but there is a 4-hour supply zone up here, right? It's not fresh, but nonetheless, it's a good place for me to come out of, right? Let's just draw that in so you can see that. And that's right there, guys. Okay. That's right, so it's not fresh, because as we can see, the market produced this bearish engulfing, it then pushed back into it and then had a massive push down, right? So this is where I took profit. So here, we've got a perfect opportunity to risk 39 pips and get a profit of 238 pips, all right? So that is a perfect risk-reward ratio for me personally. For you, it could have been different, but what you've got to understand is there's nothing over here that represents a rally-based drop. These are all drop-based drops. Okay, with here we have a rally base and a drop, right? So this makes everything extremely clear. So I hope that clarifies and clears the things up for you guys. Number one, if you're looking for a high probability trade, you want to make sure that you're on the extreme of the curve, either near the highest high or the lowest low of the curve. And we already, understood how we work that out. We just have to look to our left. And when it comes to profit margins, we just have to look for the next opposing zone on the same time frame that we executed our trade on. Okay, very, very simple, guys. Yeah. So I hope this video has cleared a few things up for all of you who watched it. If you have any frustrations, guys, any struggles, please leave me something in the comments.